Hello, in this video we'll talk about prizes and awards. Now there's a few problems that we're going to cover. The first problem, Coconut is a contestant on a popular television game show. You might be thinking of your favorite television game show. I'm thinking of mine. I think you get the point. So Coconut wins $50,000 cash and a new automobile, which has a fair market value of $50,000 and a retail price, a sticker price of $60,000. The full $50,000 of cash is paid to Coconut's church pursuant to Coconut's directions. And then the car, the automobile, Coconut actually keeps. So the question here is, what are the income tax consequences of everything going on? And remember, whenever we have to worry about income tax consequences, we need to go through 5 questions. So the first question is, what amount of income, if any? What amount of income, if any? And this deals with inflows. So here, Coconut is receiving $50,000 cash and also an automobile, which has a value of $50,000 but a retail price of $60,000. So that's inflow. So we have that. Also, the next question is, what amount of deduction or credit? What amount of deduction or credit? And this deals with outflows. Well, a possible outflow here is the cash is paid to Coconut's church, with which many of you might be thinking about charitable contribution deduction, because generally speaking, a lot of people know about that. So that's something we have to consider. The next question is when. When is the item that has tax consequences going to be reported on the tax return? Who? Who has tax consequences? We have Coconut here, we have the television game show, we have the church. Who has tax consequences? And finally, the character. The characterization of the income or deduction. We're not going to worry about character here. We're going to deal with the first 4 questions. Now, we're dealing with income, the inflows. Let's talk about that first. When we're dealing with income, we know that under Code Section 61, gross income is income from whatever source derived, very broad definition. And under Glenshaw-Glass, we have our 3-part definition that gross income is when a taxpayer has a undeniable accession to wealth, which means that net worth has gone up, right? Assets minus your liabilities has gone up. There is a realization event, right? There's a severance, a realization event, and there's dominion and control. Well, looking at a game show or a prize or award that someone receives by being on a game show, that's easily going to be considered gross income. Because if you look at all 3 criteria, right, for gross income under Glenshaw-Glass, right, the 3 criteria of Glenshaw-Glass, remember, we have the accession to wealth, which means, again, the net worth, which is assets minus liabilities, has gone up. The net worth here, $50,000 cash is an asset, and an automobile is an asset. So net worth has gone up. Now you might be wondering, okay, well, what about the cash gets paid to the church? We'll talk about that, okay? Second is realization event. There is a realization event that takes place. Here, is there some type of realization event with severance? Yes. Being on the television game show is considered similar to a service, and the service actually results in getting the cash and the car, which can be severed from the actual service. So it's very analogous. It's not the same thing, but it's very analogous to severance through service. All right. The third requirement from Glenshaw-Glass is that there's complete dominion and control, meaning that the party can do as he or she sees fit. Now, Coconut receives the cash and decides for the cash to go to the church. So that is the dominion and control. It can be paid out to anybody. But it still is considered taxable, and that's the who question too. It still originally goes to Coconut. So even though it goes directly or goes to the church, there was dominion and control because Coconut was able to order where it went. It wasn't a television game show where it specifically stated, okay, well, yeah, it goes to your charity. It goes directly to your charity and you have no say. That would be different. And that's also an issue, by the way, of who. There's a case that deals with, it's Giannini, which actually dealt with what charity. And that potentially still can have tax consequences because, again, the dominion control issue. That's a who question, though. But here it's very obvious. So that is for the cash, even though it did go to the church, and the automobile. And we'll talk more about whether there's a potential deduction. I'll talk about that, okay, in a moment. But it looks like all three are met. All three are met. And that looks like, and this means that it's very likely that cash and the car are to be included in the gross income of Coconut. We're going to include these items in the gross income of Coconut. Now, it's important to understand that, and that's under first blush. It's important to understand that there's actually a special rule, a specific inclusion rule that deals with prizes and awards in the Internal Revenue Code. And you might be wondering, why would there even be a specific rule? Shouldn't it just follow the general Glenshaw Glass rules like we went through? And the answer is yes, you're right. But there was a time, a long time ago, back actually when there was the $64,000 question, that game show a long time ago, there was actually consideration of whether a prize or award was gross income, and some people actually viewed it as a gift. Well, now it's clear that it is gross income, and it's even more clear because Congress had put the specific provision of dealing with prizes and awards. And it specifically says that prizes and awards will be included in gross income. Now, there is an exception to the prize and the award. There's a few exceptions, but there's one major exception that we call, that sometimes is referred to as the Nobel Prize exception. The Nobel Prize exception. And the Nobel Prize exception, it does not require inclusion if there are four things met, four requirements that have to be met. And they're very strict requirements. And this came about because of the Nobel Peace Prize and people receiving, I think it's around $1 million. It can change in the future depending on when you're watching this video, that actually it's excluded from gross income. If you do certain things. So the first thing is that the award be primarily recognized for past achievements in which the recipient is in a specified field. And these specified fields deal with religious, charitable, scientific, educational, artistic, literary, or civic achievement. So really what we're talking about here is kind of like areas that improve society. Again, just like what we have under the Nobel Peace Prize. Well, being on a game show, would you argue that improves society? I don't think there's any valid argument. I mean, yes, it provides entertainment, but does it improve society? No, it doesn't. So this is not going to meet the exception. And you have to have all four of these. So we don't have this, so we're not going to be able to get the exception, which excludes from gross income this amount. But let me talk about the other three requirements, just in case you're wondering. The second requirement is that there's no selection or submission by the party that wins the award. There's no selection or submission. So it's automatically based on your prior work, and people notice that, and you've pretty much been nominated by somebody. And again, that's how the Nobel Peace Prize works. Well, going on a game show, you actually have to sign documentation, and in that documentation, you're actually submitting that. So never in a game show will you not be considered submitting or selecting yourself for the game show. The third requirement is that the recipient is not required to render future services, any type of future services. And this actually is something that's a lot of people question when it comes to this rule, because sometimes people get awards and they have to do like a speech or something, and whether that speech is valued. And you got to look at the specifics of the speech. So you're not required to render future services. We actually have that here, but that's not irrelevant because we failed the first two, right? And then finally, number 4 is that the recipient transfers the award to a qualified governmental unit or nonprofit. So it's transferred directly to a governmental or nonprofit. And we're talking about a 501c3 qualified nonprofit here when we talk about a nonprofit. It has to actually be a qualified organization. You can't just create something. So actually, you don't get to keep the money. So if someone wins the Nobel Peace Prize and they didn't, again, select or submit themselves, I mean, the honor of the Nobel Peace Prize itself is a huge deal, right? Then the field is met if you're in the Nobel Peace Prize because it improves society. It's a religious, charitable, scientific, educational, artistic, literary, or civic achievement. And that's why a lot of presidents and other global leaders have won the Nobel Peace Prize, because it's a very broad, it's dealing with improving society. You can't render any future services or be required to. There's no selection or submission, and it has to be transferred directly to a governmental or nonprofit organization. If you meet all 4 of those criteria, you do not have to include. You do not have to include. Okay, so unfortunately, this main exception from the prize and awards, and there's some other exceptions. The other major one is the employee achievement exception, which that doesn't apply here because it's not an employee. So that means that Coconut does have to include the cash and the car and gross income. Does have to include. Now we have to talk about the value of these items. This is important. So generally, the general rule, as we know, is that when you have gross income, we use fair market value. We use fair market value. So for the cash, the inclusion amount is going to be $50,000 because it's the face value. For the car, though, we have an interesting question. We have a fair market value of $50,000 and the MSRP of $60,000. MSRP is usually, when you think of an automobile, is the sticker price. When you go onto the lot and you see the sticker price, do you buy the car for the sticker price? Almost never, right? You almost never do that. There's some cars out there that they go much below the sticker price, okay? So that's why the fair market value is less. So as I said, the general rule is we use the value, which would be $50,000, generally speaking. However, this is something important. For television game shows, like, for example, The Price is Right, which is the one I played earlier, if you actually look at the contract that the game show makes you sign, they can actually dictate what value you use. And they will state, we use MSRP. So for this television game show, it's very likely that that Coconut will have to actually record $60,000 beyond the fair market value. And that's because the television game show probably requires, when Coconut acknowledges going on the show and whatnot, that they will include $60,000. And that's so the game show can get a $60,000 deduction. Very important thing there. There's another interesting thing when you deal with awards. My mom actually, she one of her hobbies is sweepstaking, which used to it's a huge thing online. Used to send them in. Now it's a bigger thing online. And when you do these sweepstakes and you win these trips and these various items, these big items, a lot of times it's not cash, but it's big things to promote the actual company. From Coca-Cola, all these different companies. Well, they will, a lot of times, they don't state what the MSRP is, and you actually can negotiate with them because, again, they get a deduction for the amount, and you have to include for the amount. And they'll send you a 1099 of the amount, and you can say, no, that's way too high. I don't have to include it for that amount. And you can actually negotiate a lot of times with the companies, but it has to match. It has to match. So Coconut is going to have to include in gross income the $50,000 cash and the $60,000 for the car, so $110,000. Well, what about the payment to, or the direction to the church? So this the $50,000 cash will also, if the church is a qualified 501c3, which almost surely it is because church is qualified, then because it's a 501c3, the $50,000 will actually be viewed as a charitable contribution deduction. And Coconut can get the benefit of that. So you're probably wondering, okay, well, potentially excluding it, like we saw from the Nobel Peace Prize example or exception, versus including it and then deducting it. Well, which one is better? Would you rather just fully exclude it, or would you rather include it and then deduct it, or does it not make a difference? Some of you probably think it doesn't make a difference because it nets out. And actually, that's not right. Because when you learn more about the charitable contribution deduction that Coconut here is going to be able to deduct, yes, Coconut has to include the $50,000, but when you look at the deductions, because charitable contribution deduction is a below-the-line itemized deduction, there's various limitations on that. Various limitations on that item. And also there's the issue of the standard deduction. So it's actually not as good, generally speaking. It might be, but usually it's not as good as just being able to exclude the $50,000 to begin with, because you might end up having to include $50,000, but you might only get the benefit of $40,000 of the deduction based on the various limitations that you'll learn about when you learn about the charitable contribution. All right, and the next problem, we have Avocado, who receives $1 million as a result of winning the Nobel Prize. So we just were talking about this, right? We go through, again, the general framework of inclusion. And again, there's a provision that says that prizes and awards are included in gross income. So under the general rule, the GR, the general rule, this would be included in gross income. This would be included in Avocado's gross income. However, there's the exception, which again, I actually called the Nobel Peace Prize exception. And that's because it came from that. And again, there's really 4 things that have to be met here. So the first is that it must be primarily to recognize the past achievements of the recipient in one of the specified fields. So it has to be in a specified field. And again, it's a specified field that promotes society, right? We talked about that. It increases, benefits society. And those areas are religious, charitable, scientific, educational, artistic, literary, or civic achievement. It's the Nobel Peace Prize, so that's met. The second requirement is that the recipient was selected without any action on his or her part to enter the contest or submit. So no enter or submission. And that's exactly how the Nobel Prize works. There is no, you don't enter, you submit yourself. You are, there's a committee that actually looks at these things. Number 3 is the recipient is not required to render any substantial future services. So no substantial future services are required to be rendered. And with the Nobel Prize, that is the case. So far we're good. 1, 2, and 3, we're going to be able to get this exception, which excludes it from gross income. Number 4, and this here is something where we're not sure. The amount of money that's received, or whatever, the prize or the award, right, whatever it is, has to be transferred to a governmental or qualified nonprofit organization, which again, we're talking about 501c3 nonprofit organizations here. So this one, though, is questionable because we're not told. Now, if Avocado designates that this is going to go to this organization, it would be excluded. However, if Avocado keeps it, then it's going to be included. So there's 2 possibilities here. If Avocado keeps the $1 million, we include in gross income. Avocado has to include in gross income. Or if Avocado does number 4, Avocado can exclude this amount from gross income, which is huge because Avocado will not be taxed on it. So there's really 2 possibilities with respect to this situation. We don't know. Is Avocado keeping it? We'd have to ask. Or is Avocado going to transfer it? Now, if Avocado wants to keep the $1 million, then Avocado is going to be taxed on it. But if Avocado wants to transfer it to a governmental or qualified nonprofit, then it's important to understand. Also, we want to tell Avocado that, if you try and get the charitable contribution deduction, keep it and give it to a charitable contribution, just go ahead and transfer it directly so you're not taxed. Because sometimes taxpayers think, oh, well, I want the charitable contribution. Again, remember the charitable contribution a lot of times is very much limited, and it's better just to have it fully excluded because you run the risk of having to include it but then not get the full benefit of the deduction. So now that you have a pretty good understanding about the taxability of prizes and awards, as well as the exception, the main exception, the Nobel Prize exception, let's look at the next one. So Peach receives $5,000 annual American Legion Award, so we're dealing with prizes and awards, for the outstanding citizen of the community. Now note that the recipient is selected each year by a secret committee of the American Legion. No one applies or enters the competition. Peach is going to specify that $5,000 is to be paid directly to a local charity which provides dental care for impoverished children. So this really, just looking at this at first blush, looks like the prize and award exception. where we have exclusion. So let's see if we meet that criteria. The prize and award exception, the Nobel Prize exception. So the first criteria, again, is that it has to be to recognize past achievement in one of specified fields that improve society, and one of those areas is civic achievement. So outstanding citizen of the month is civic achievement. That's requirement number 1. Remember that there's 4 requirements. So we're going to go through the 4 in order. Okay, so we have citizen of the month. Number 1, that's civic achievement, so that's met. Number 2 is that the recipient was selected without any action on his his or her part, or no submissions or whatnot. So it's done by a secret committee and nobody knows. It just goes out in the community and picks people. There is no, submission or whatnot. So number 2 is met. There was no submission by Peach, okay, or any type of, way to get into the competition. Number 3, the recipient is not required to render any substantial future services as a condition of the prize or award. We're not told anything. So number 3 is met. Nothing is required, right? Number 3, no services required. That's important. All right? We're not told anything about that. You would have to be, that would be something you'd be told. And then number 4, Peach specifies that the $5,000 is to be paid directly. So it doesn't go to Peach. It goes directly. That's, by the way, it's a big difference. If it goes first to Peach and then to the dental, then it has to be included and then deducted as a charitable contribution. Paid directly to a local charity which provides dental care for impoverished children. So we're going to assume that this is a qualified nonprofit. I mean, we're told it's a charity and it meets a 501c3. So this is number 4. This is number 4. So under the general rule for prizes and awards, this will be included. However, because the exception applies, this $5,000 is excluded from gross income. Excluded, and Peach does not have to include this in gross income. So this next one, why don't you stop the video for a moment and try this one on your own before you see my analysis. Mango receives $500 annual American Legion Award for the best essay submitted on the subject of democracy. So it's an award, right? And the general rule is we include awards in gross income based on our previous analysis. However, there is an exception, the Nobel Prize exception, which is detailed as an exception in the rules. So remember, we have to have the 4 criteria. So we need numbers 1 through 4. So the first criteria is that this is bettering society. And you could argue that, okay, well, this is dealing with the subject of democracy. It's an essay, so it can be viewed as civic achievement. So we have that. When we go to the second criteria, which the recipient was selected without any action on his or her part to enter the contest or submit. Well, we fail that one right there. So right there, because we're done. Because it was submitted by Mango. Mango submitted the essay. It was submitted by Mango. So this will not meet the exception. Just so you know, number 3 is for services, which we're not told anything in the future, any type of future services. And then number 4 has to be given to a charity. We're not told anything about that. If Mango gave to the charity, it would qualify, but if not, it wouldn't qualify. So regardless, even if Mango did give it to the charity, right, even if Mango did, it would still have to be included. See that? You could still get the deduction for giving it the $500 to the charity under charitable contribution, but because it was submitted, notice that it has to be included. Even if Mango did give it to the qualified nonprofit or qualified governmental, it still has to be included because it's submitted. Because it's submitted, just so you know. So Mango goes ahead and has to include in gross income the $500. So I hope now that you have a good idea about the general rule with respect to inclusion for prizes and awards, as well as this special Nobel Prize exception, I call it the Nobel Prize exception, that deals with the 4 criteria and how you can actually exclude from gross income.